Welcome to today's financial update for August 28th, 2025. We've selected key highlights from the world of business to keep you informed and ahead of the game. Let's dive into the top stories making headlines. Firstly, organizers of the Target boycott are maintaining their momentum, as reported by AP News. Despite Target's promises, the boycott, which started in January, points to how concerted consumer actions can significantly impact major retailers. Pro-diversity, equity, and inclusion groups are particularly vocal, emphasizing ongoing dissatisfaction with corporate practices. Switching gears to tech, SpaceX's Starship performed admirably in its recent flight test, according to Space. The success of Flight 10 marks an essential milestone as SpaceX prepares to transition from its current iteration to more advanced models. This development aligns with SpaceX's ongoing commitment to refining its spacecraft technologies for future Mars missions. In corporate news, The Verge highlights growing internal protests at Microsoft. The employee-led movement, dubbed No Azure for Apartheid, underscores rising tensions over the company's contracts and ethical commitments. Protesters, comprising current and former employees, are challenging Microsoft to reconsider its business partnerships, creating pressure for the tech giant. Meanwhile, a recent study by Stanford, reported by the San Francisco Chronicle, reveals that young workers, particularly those aged 22 to 25, are the hardest hit by job reductions due to artificial intelligence. This trend raises questions about the long-term effects of AI on employment and the economy, and signals a pivotal shift in job markets as automation continues to evolve. Turning to the markets, the S&P 500 saw a slight uptick, around 0.2%, with traders eagerly anticipating NVIDIA's earnings report, according to CNBC. NVIDIA's performance could be pivotal for the current bull market, reflecting investor interest in tech sector dynamics amid broader economic trends. Supply chain financing is receiving a boost as Flexport is joining forces with BlackRock to expand their pool to $250 million, reports The Wall Street Journal. This strategic move aims to help retailers and manufacturers mitigate rising tariff costs, illustrating the ongoing challenges in global trade logistics. In government and regulation news, AP News highlights that Trump's critics, including Federal Reserve Governor Lisa Cook, are facing scrutiny by the top housing regulator. This development adds another layer to the complex interplay of politics and financial regulations as various stakeholders navigate power dynamics. Meanwhile, Cracker Barrel shares surged by over 8% after reverting to its original logo, according to CNBC. The decision follows criticism over its new logo, demonstrating how brand identity and public perception can directly affect market performance. Another intriguing geopolitical twist comes as Fox Business reports internal discord among Republicans regarding the White House's stake in Intel. Some Republicans are concerned this move represents a shift towards socialism, highlighting the delicate balance between government involvement and free market principles. Barron's reports that Keurig Dr. Pepper's stock took a hit after announcing plans to purchase Peet's Coffee's parent company. This decision has sparked concern among investors about potential overextension and profitability, showing the complexities of corporate acquisitions in volatile markets. Finally, Axios warns about a significant risk to Social Security data involving the personal details of over 300 million Americans. This comes amidst growing concerns over data privacy and cyber threats, prompting calls for enhanced security measures. As we conclude, it's clear that today's financial landscape is being shaped by rapid technological advancements, political dynamics, and evolving consumer attitudes. We'll continue monitoring these developments closely, providing you with the insights needed to navigate these challenging times wisely. Stay informed, and thank you for joining us. Remember to subscribe for more updates. That's all for today's financial update. See you next time.